The trends we're all wondering about is about how to really build your sustainable business, how to make the right choices, and how to future-proof your retail business. So of course, we had to go to the expert, Dane Cohen from Management One. You guys give it up. He is amazing. And he's going to take you through it.
Hi guys. Thanks, Rachel. Guys, give it up for Rachel. She does an incredible job with putting together the education. We always love to be there. Thank you so much. I'm Dane Cohen with Management One. And just to give you a quick background, Management One, we are the largest provider of inventory planning for independent retailers. So we are constantly looking at the financials and the buying and helping make retailers make better buying decisions. But I also want to give you a minute of my background because I come from independent retail. So the mindset, what you're going through, what you are dealing with, whether you have a retail business that's been around for decades or whether you are just starting out, there is a very specific set of hopes and dreams and fears and realities that come along with being an independent retailer. And we want to speak to those directly today. So let's talk, let's get into it. We have a lot to cover, so we're going to jump in. Everyone should have a little card on their chair that has a QR code to the presentation. So we're going to go over a lot of formulas and numbers, and a lot of stuff's going to be rolling by pretty quickly. So don't worry, you don't have to get snapshots of everything. You just scan that QR code and you'll get the presentation right in your inbox. So no worries there. All right, let us jump in. So everyone yells at me for starting my presentations this way, but I always like to start with a little bit of a reality check. What's going on? And some headlines in the retail industry right now. And honestly speaking, okay, it's a little confusing what's going on right now, right? Here we have retail sales rose more than expected, the Dow rallies, inflation fears, and then we're saying that the NRF says we're not heading to a recession. So it's very confusing right now what's going on. It's a little bit of a WTF moment with retail headlines. But what we are going to learn here is that we want to tune them out. We want to tune them out. We want to look to the realities of the facts on the ground and make decisions based on facts and data and not out of fear. Okay? That is so important right now. And so the idea of future-proofing your business is the idea of how can I set myself up for success regardless of what is to come. All right? So let's talk about the realities. Let's talk some facts. 2021 saw the strongest retail growth in 30 years. That is a major banner year for retail. Okay? And not only that, we hear a lot of e-commerce, but this was the first year since being reported that the growth of brick and mortar outpaced e-commerce. Okay? So we've been seeing headlines for decades, brick and mortar retail is dead, and 2021 showed us it is alive and it is well, and not only that, it is thriving. Woo! Let's look at some more facts on the ground. All right, this is a compilation of our clients and their sales from July 2021 to June 2022. Now, why this is so important, it's not to show you, a peek into our results. This is a really good cross-section of independent retailers. We work with 1,200 independent retailers across North America. So this is going to give you a good idea of what's actually going on in the boutique market, right? So let's just take a look at this growth. In purple, we see growth over 2020, right? Which you could say to me, Dane, growth over 2020, so what? 2020 was a wacky year. But let's look at the orange here, okay? We're seeing almost, look, in September, October, and November, we averaged growth in those 3 months over 2019, all right? And now if you look going into 2022, we are still seeing major growth in our boutiques. Now, we see a little slowdown if you look in June, right? That's in June we saw a little slowdown. But that is because the reality is we're now comping some major numbers. I just showed you those 2021 numbers, the biggest year for retail in 30 years, right? Comping numbers is going to get a little bit tougher, but that doesn't mean we're not seeing continued growth and success. So, right, this speaks to we want to look at the facts and not just the headlines. Okay, and what are some of the things that are causing, potential slowdowns? What's really going on in retail right now? Well, we have some external forces that are pushing against boutiques right now. Obviously, we'd all be under a rock if we didn't know that there was a continued rise in inflation, right? That's just a reality. We're now set into that new reality of inflation. A lot of people saw excess inventory, all those supply chain disruptions that were going on, that were kind of the tail end of the pandemic into 2021. Well, now a lot of that was cleared up and inventory landed, and now we're seeing some excess inventory and some stock imbalances. And then, of course, there's I won't say the big R word, but there's, some economic slowdown and, some global uncertainty that's leading to, little questions about what's going on with the economy. Okay? But, again, we want to look at facts, not just fears. So, take a look at, this is a great little indicator. Deloitte is one of the largest analyzers of data in all businesses. They really take a look at businesses in all cross sections. And this is looking at apparel retail, okay? And they're predicting for the back to school season, right, which is, what are we, now, right? Who's starting to think about back to school? Who's been in the store recently and it's all back to school shopping? Well, they're expecting that inflation, actually that inflationary that's driving up prices is also going to drive sales revenue, right? So you're going to see almost 8% they're predicting growth in sales over this back to school season. And they're actually predicting that as digital cools a little bit, right? We've seen such massive kind of saturation of the e-commerce market. As that starts to cool a little bit, they're actually predicting that 49% of all sales are going to come from in-store shopping. So this is really important, right? This is really important to know that there is still growth and there is still forward momentum in independent retail, in the boutique business right now. Okay, so this is where we need to get smart. Success is when opportunity meets preparation. Okay, if you go into uncertain times without a plan, I'm going to tell you what's going to happen. You're gonna face volatility in your business. But if you are prepared and you are taking some of this advice that we're gonna go over today and incorporate it into your business, you can withstand whatever storm comes your way because you're gonna be making decisions, again, facts over fear. All right, so how are we gonna stay ahead of the retail curve? Well, really, I kind of broke it down to 4 simple things that I think every retailer needs to focus on. First, it's about right-sizing your inventory. So we want to make sure that in your stock, you have the right amount of goods by category. All right, we're going to go into this in more detail, but it's super important right now that you are making purchasing decisions with a plan and making purchasing decisions that are going to be smart and effective and efficient for your business, okay? And then the second thing when it comes to maximizing profit and cash flow is have a real understanding of your expenses, okay? As a business owner, as a small business owner, you really need to take ownership of the expense structure in your business because when you put those two things together, right? Understanding where your money is going towards your purchases, which is your largest investment in your business, understanding your other expenses, right, your operational expenses, that is the key to unlocking positive cash flow. The other 2 points I just want to bring up quickly, and we're not really going to touch these today, but I definitely encourage you, there's a lot of great speakers here. We want you to focus on the digital customer experience and what that means for your customer, whether that means e-commerce or just having a great social media presence, and then really connecting with authenticity, right? So there's so much noise out there right now on social that really finding your voice and what separates you is really going to be vital to your success in the year ahead. Okay, but we're talking about cash flow, we're talking about profits, so let's talk about the top 10 actions you can take to future-proof your business. All right, let's kick it off with number 1. Keeping inventory fresh. All right, so here is a real moment where facts over fear is so important. One of the biggest killers to a retail business is stale merchandise. If your customers are coming into your store and not seeing fresh new goods, you are basically giving them a reason to not come back, okay? So if you're saying, hey, I'm a little bit nervous about what's going on bringing these headlines, I'm not gonna bring in new goods, I'm gonna slow down bringing in exciting product, your customer is going to notice that and feel that. So it's about focusing on bringing in fresh new goods and the right goods, okay? Because customers want the high of shopping, right? They want that dopamine rush of walking into the store, purchasing something new, getting excited about a new product. You know, that's why we see the massive lines when we drop a new collection. That's why we see, you know, the excitement over a new product. Can anyone tell me how many times a year the average customer visits Zara? Can someone take a guess? 5? 5? Okay, that's a good guess. 7? All right. 15. 17 times. 17 times. That's massive. The average boutique. Anyone want to take a stab? Come on, our super seniors. 5? 5? 3. 3. Okay. So why is it that Zara gets so many repeat visits from their customers? They constantly have new goods. And their business model is, we don't reorder, we don't recut, we have a short shelf life for our product, we re-merchandise constantly so that every time someone walks into that Zara, they feel like they are walking into a new store, right? That when I walk through those doors, I'm going to find something new and something exciting. And that is something that everyone can take to their boutique, whether that be an in-store boutique, an online boutique. You know, if I visit your website and after 2 weeks I'm still seeing the same banner that's scrolling on the front page, maybe 2 weeks later I'm not visiting again because I'm expecting that maybe there's nothing new. So that newness, that freshness is super important. So let's talk about the new and novelty, how we can really get some great inventory turnover. And then later in this presentation, I'm going to show you how this is actually going to impact your cash, right? It's not just the excitement of it. There's a reason why this is going to be so beneficial to your cash flow. So first off, let's talk about new and novelty. Buy with conviction. I really encourage you all here. There's a reason why you are sitting here at Mountain, right? It is because you have a talent and you have a passion for product, right? You're about to walk into those doors and see thousands of vendors, thousands upon thousands of style, and what your talent is going and picking what's right for your customer and what they're going to respond to, okay? So when you buy with conviction, right? Don't just walk into a booth and buy, I want to buy 2 of those and 2 of those and 2 of those because I just want to please everyone. Buy narrow and deep and go with what your conviction says, right? If you think something's a winner, put some dollars behind it, because if you have just a little bit of everything peppered around, you're a jack of all trades and a master of none. Also, when you're buying, think about flowing your merchandise, the flow of goods, right? If we're talking about the back to school season, everything lands by September 1st. When your customer walks in again on October 15th, what newness are they seeing? So you want to space out your deliveries. When you're going in, when you're negotiating with vendors, when they're showing you arrival dates, you want to make sure that you have new arrivals peppered in month to month. You want some landing in September, some landing in October, so on and so forth. So really pay attention to ship windows and how much you're purchasing by ship window when you go in and make some purchases. Okay? Budget for markdowns. Why are markdowns so important for newness? That seems counterintuitive, right? Markdowns are a vital part of retail. I know we don't like them, I know we think it's an evil thing, but markdowns are actually what allow you to get the old stuff out and open up your cash flow for new merchandise to flow in, okay? So if you have something sitting there on your floor that has not sold, we're in 2 months, 3 months, right? All of a sudden, that now becomes a liability. It is now just cash, your cash sitting on your floor collecting dust, okay? So markdowns are a healthy part of retail. Don't fear them, all right? And then we want to fail fast. So I'm going to talk about the concept of fail fast in a minute, but here's a good rule of thumb. If 20 to 30% of your merchandise is older than 4 months, you may have a problem, right? Because then that, again, that means that when people are walking in, when they are seeing your boutique, they're not getting that inspiration, that dopamine high of that new product. And again, as always, merchandise should never have birthdays. Anybody ever hear that expression? Okay, we should never be throwing a birthday party for merchandise. Okay, so the concept of failing fast and why it's so important to inventory freshness. Well, with failing fast, by analyzing your business and understanding how product is selling, you have the ability to make quick decisions, okay? So if you go in and you put some money into a new brand, and you're excited about landing it, right? We want to make sure we do everything we can to promote it. We want to get it on our marketing, we want to get it on our socials, we want to get it on all our sales channels. If you're live selling, we want you to sell it live. If you're an e-commerce business, get it on the front page. If you're an in-store retailer, we want you to have it on that display table right up front. So that is, you're going to take every effort you can to sell. And when you don't, if for some reason your customer doesn't respond to it, maybe it was just a miss, we want you to fail fast, right? There's no reason in delaying out the inevitable. If something is not selling, if it's just not moving, if it's just your cash collecting dust, then we want to take that markdown and again, open up the dollars back into your business. Okay. Number 2, properly classify your merchandise, right? This seems like an obvious one, right? Okay, so I have tops, I have bottoms, I have dresses. That's my class structure. Do you ever go in, when you walk into a store, okay, and you have, let's take tops for example, okay? If you're walking around town on a Sunday and you're just going to get a cup of coffee, all right, and you want to wear a fun, graphic, loose tee, right, that's a top, okay? If you have a big event, it's your best friend's birthday party, and you're going to a fancy dinner and you want to get a great top to go with your leather pants, those are 2 very different things, right? A top is not a top is not a top. We have to get smart about classifying your merchandise. So here's a great example. I had a big debate with this with a retailer about 6 months ago who said, I can't go deeper than just looking at tops are tops, Dane. I don't need to look at it any other way. What's the big deal? I have a bunch of tops. I mean, that's how it sells. I begged and I pleaded, we're going to split up into, just give me two categories, dressy tops and casual tops, okay? She doubled her business in casual tops because she was splitting her budget across two very different product categories. So your product categories are your roadmap for how you're going to measure your business. Okay, so just how pilots, how many people flew here to Vegas, right? How would you feel if your pilot in the middle of the flight said, hey, you know what, today I'm not going to use any of my instruments, I'm just going to wing it. I'm just going to wing this flight, we'll see what happens, right? You're not going to feel very confident about landing that plane. So your instruments and your tools are the KPIs of your business, the key performance indicators, okay? These are your metrics for success. And analyzing those metrics and staying on top of them, okay, is going to be the game changer that is going to help you land the plane, all right? So why this has to do with merchandise classification is, again, this is the language that will never change season to season. Brands come and go, trends come and go. Product categories will always stay the same. You will always have a skirt, you will always have a t-shirt, you will always have a novelty top or blouse, right? So by looking at it season to season, that is your truest form of comparison. So I encourage everyone, whether you're building your business or have an established business, really make sure your merchandise classification makes sense, and it's the way your customers would shop, right? If they would walk in and say, hey, I'm looking for a graphic tee, maybe graphic tee is a great category for you to have. And bottoms, that's another great one, right? An active legging is not the same as a flare jean. It's just not the same. Okay, the questions we want to be asking yourself, this is always, right? When it comes to your product categories, really it comes down to, do I have too little or do I have enough? It's the Goldilocks of inventory. You want just the right amount of product. And that's easier said than done. Again, the merchandise classification is the roadmap to how you're going to get there. Okay. Now we're going to talk some numbers, all right? So if anyone has their coffee, take a sip. We're going to get into some numbers. We got to be alert because, listen, this is very important. We just had a whole presentation on trends, right? Super important, super inspiring, okay? That is one side of the business. That's one side of your retailer brand. The other side is you are an entrepreneur. You are a small business owner. This is your livelihood, and this is the people that work through your livelihood. You know, I know the pain of a slow cash flow month, right? We've all felt it as a retailer. So, looking at your business through this lens is not just critical to the success of your business, but it's critical to your success in business, really. So, let's look through and let's talk about cost of goods sold. Who here has heard about cost of goods sold? Who here looks at that, right? It's a super important metric, right? It is really one of the foundational numbers in your gross profit. But cost of goods sold is one of the most misleading metrics in all of retail. All right, we're going to take an example, and I want you to think about this in terms of your business. I can't tell you how many times I talk to a retailer and they say, listen, I'm doing good sales, my accountant tells me that I'm profitable, but I never have cash in the bank. I never have cash. So who cares that I have all this profit on paper? I don't have cash in the bank. And here's how that happens, okay? Let's take a retail store that does $1 million in sales. Oh, I think I have a laser pointer. $1 million sales in a year, okay? So they started the year at $250,000 in inventory. You add their purchases. They went out and through that year they purchased $700,000 worth of goods. And they ended the year with $350,000. That's how you calculate your cost of goods sold. So your beginning inventory plus your purchases minus your ending inventory. So the cost of goods sold here is $600,000. Okay, now let's get our gross profit from that. Gross profit, simply, you just take your sales and subtract out your cost of goods sold. All right? So, $400,000. Net profit, we take our gross profit, we subtract out our expenses, and we're left with a net profit of $50,000. So on paper, right, your accountant, your bookkeeper would tell you this retailer for $50,000 in net profit. Great, right? Let's look at it another way. Let's look at it through the lens of your bank account. And this is a much simpler calculation. Okay? Cash in, cash out. You spent $700,000 on goods. Your operational expenses in the business were $350,000. You did $1 million in sales. So you spent $1,050,000 and you brought in $1 million. You're $50,000 in the red, right? So that $50,000 in net profit in your bank account actually reads as negative. Okay? So this is why looking at your cash margin and your cost of purchases is so important. You want to look at profit, you want to look at your net profit. That, of course, is going to be a hugely important number in your business, but it can be misleading. Okay? So your cash margin is super important. It's just what you sold at retail minus what you received at cost. That's your cash margin. That's how much cash you're actually pulling out of your business. So when you come here and you're making purchasing decisions and you bring that back, right, it all ends in cash. That is the end goal, right? Okay, so cash margin is king, number 4. How many people here are buyers? How many people here want to be a buyer? Okay, you're not just buyers, you are investment brokers, okay? You are coming here and you are investing in product that you think is going to have the best cash return, okay? You're taking a risk, you're investing in something, and not only that, with other product retail businesses, you know, in fashion, you have a time stamp, right? Trends don't last forever. If you bring in a great product assortment, right, and it's landing and you're so excited about it, once that hits your floor, the time is ticking, right? The time is ticking until that merchandise becomes old news, okay? So you are investment brokers in a very tricky business because the investments you are making are time dependent. You got to get them out, and you need that freshness in your business. All right, we're going to do some more math. You ready? You ready? Okay. Let's take a category comparison, okay? I do, in my store, $50,000 in sales in dresses, okay? My cost of purchases, I spend $26,000 to make that $50,000 in sales. So my cash margin is $24,000. Great, we pulled $24,000 out of dresses. Let's look at tops. Same, I have $50,000 worth of sales. My cost of purchases were $28,000. I pulled $22,000 in cash out of my tops. Great. There's one more important factor. That's what we were just talking about, time. Time. How long did it take the retailer to sell the dresses and the tops? So, in our dresses example, the retailer turned it twice, and the same amount of time, he flipped that inventory of tops 4 times. Okay, so where we really net out on this is in your dresses,
For every dollar you spent, you got $1.84 back in cash. And in your tops, you got $3.14. So the huge factors here in calculating really the cash profitability of your business is the cost of goods purchases, your cost of good purchase, and the amount of time it takes to sell. So, stock to sales ratio. Who here has heard of stock to sales ratio? Okay. Well, it's really quite simple, your stock to sales ratio, but it's also one of the most complicated parts of getting right. But really, it's just how much of something do I need in order to achieve my sales goal? So, if I'm forecasting that I'm going to sell 12 pens in the month of August, how many pens do I need in stock?
20.
How many? There's no wrong answer here, is there? How many? 12? Someone say 12? Oh, no one ever gets it right confused. Well, right, technically you only need 12 pens, right? If I'm going to sell 12 pens, I only need 12 pens. However, in retail, we know that's not how it works, right? We want to have merchandise to sustain us through the month. So, look, now we get into more complicated factors, right? What if the pen comes in 12 colors? Then how many pens do I need to make the sale? All of a sudden, this gets more and more complicated. What happens if there's multiple sizes of pen? There's a small, there's a large. So nailing down that stock to sale ratio is super important. So again, let's do another category comparison. Here we have your jeans and your skirts. So in jeans, I did $3,000 in sales, skirts $3,000. Okay? My gross margin on it, gave me $1,500 in gross margin dollars on jeans, $1,350 in skirts. What's a better performing category? Jeans? Okay. Now, let's take that factor of time and look at the stock to sales ratio. Okay? We had a stock to sales ratio of 9 here and 3 here. That means I needed 9 to sell 1, needed 3 to sell 1. So how does that pan out? To sell that $1,500, I needed $27,000 of jeans sitting on my floor, which is very common for denim. It turns slow, okay? For skirts, I just needed $9,000 to make $1,350, which sounds like a better investment to you, going back to that investment programs. Skirts, okay? So this is why it is so critical to view your business through the lens of cash and not just sales. Okay, let's switch it up a little bit. Number 5, analyze retail transaction trends. Okay, this is a simple one. I'm not going to spend too much time on this. I'm just going to give you this piece of advice. Take these 5 metrics right here and look at it once a week. Set a time, put it aside, take 30 minutes, and look at this metric once a week, these 5 metrics. Okay? Your average order value, okay? How much on average is my customer spending when they check out? My units per transaction, about how many units are they purchasing? Are they walking away with about 3, 3.5, you know? How much are they actually walking out with just the units? What was my traffic, whether it's in-store or online? How many people walked into my business? Or how many people came through my website? Okay, what was the traffic? Then, what was the conversion rate? Out of that traffic, how many people actually made a purchase? And then, of course, your sales by category. Just a top line sales by category. And I promise you, if you look week to week at this, if you stay committed to it, you will start noticing patterns and trends in your business, and you will then be able to review that and respond to it, okay? So if my unit per transactions are down, here's the old, someone was a shoe retailer, right? What's the easiest way for a shoe retailer to get their units per transactions up? Socks. Socks, right? Every time you sell a pair of sneakers or a boot, you sell a sock with it. Your UPT on that purchase goes from 1 to 2. That's double your units per transaction. So these are the types of things, if you're measuring on a week-to-week basis, right, then you can respond to your business accordingly. Okay, track vendor performance. So on the QR code, this will bring you to our website. We have this incredible tool, which is called the Vendor Performance Scorecard. It's a free tool, it's there for you to use. And basically what that is doing, it is analyzing your performance of your vendors by vendor, by category, all right? If anyone needs help using it, we'll set up a call, we'll teach you how to use it. But what's important here is, okay, if you are a new retailer, I want you to take this to heart. We are in this together, right? The vendors and the retailers are in this together. But that doesn't mean that you don't go into every appointment and every buy that you make. You want to go in fortified with data and that gives you power in your negotiations with your vendors, right? So if you come and you make some purchases, the next time that we're here in February, you should know how that vendor performed in your store. So that when you come back to Magic, right, you can open up a conversation with that vendor. Hey, listen, I did great with skirts from you, but I really didn't sell the jackets. Okay? So I'm gonna pull back on jackets, but let's put some more money into skirts, which really perform well. That's the type of information that's gonna give you power and not let you just sit there and then say to you, you know, this category is the best. You gotta buy it. I got the new styles here, right? You want to come in armed with data. So the Vendor Performance Scorecard, it's a free tool. I would love you all to use it. One more free tool for you. We're doing a lot of free in the last 10 minutes, okay? Is your 12-week cash flow tool, all right? So we're talking about how important cash is to your business, right? And we're talking about some theory, okay, that sounds really nice, but how do I put it into practice, okay? This tool is going to help you put it into practice. So instead of once a year with your accountant reviewing your performance, this cash flow tool is going to help you take that down to 12 weeks, okay? And it's going to track how much sales did I do, am I projecting to do, how much, it's too small. Okay, how much cash is coming into the business? What do I owe my vendors coming up in the next 12 weeks, right? So that you can have control and understanding of what your cash position is going to look like over the next 12 weeks. It moves that fast. It's not enough to once a year be sitting down with your accountant and go, how did I do? How did I do? Okay? We need to be tracking this in tighter and tighter timelines, and this 12-week cash flow tool is a great way of keeping you accountable and understanding how you're actually going to pay for your bills, right? That would be nice, right? You can go inside a little crystal ball, and you have all the information, we just want you to execute it. So that's another free tool for you. Okay, the next, number 9. Your initial markup. Okay. So, I know I'm throwing a lot at you, but here's another really important thing to take action. Right now, inflation is real, inflation is driving up costs, which means if your costs are going up, so too must your prices. Okay? The way that we price things in retail is your initial markup, right? If I walk into the booth and someone's selling me a t-shirt for $10, what's my initial markup, right? If I have a 2-time markup, I'm selling it for $20, I'm getting 50% margin. This is super important because where you set the initial margin is going to dictate how much cash and profit you can pull out of an item. That's the one. Okay. So, here's the pushback I always get on markup, okay? Well, my vendor sets what the price is going to be, so what control do I have, okay? well, you know what, I can't deal with calculations. I just multiply it by 2.5 and whatever I get, that sounds about right, okay? Or I just double it and I throw in $1 just to make myself feel good, okay? These are not strategies that are going to impact and move the needle on your bottom line. Now, it's true, we definitely are in a marketplace where with online, with a lot more of the democratization of fashion, some prices are set. You know, if you buy a pair of, you know, AG denim, it's going to be online the price, your customer sees it, it may be harder to price that. But there are tons of vendors in there that you can look to really drive margin on your pricing. Okay? And that may be a discussion of whether this is a brand you can carry. If you can only get 2 times markup out of a vendor in there, maybe it just doesn't align with your financial goals. Okay? Or if you really need that vendor, you need to find another one where you can drive your margins higher. Okay, so how do we get to your initial markup? How do we decide what it should be? We're not just picking a number out of a hat, right? So, there are 3 key elements to finding this calculation. Your operating expenses, okay? What are my operating expenses as a percentage to sales? What is my expected markdown percentage? And then where do I want to end at the end of the year? And this goes back to the preparation, right? What do I really want my net profit to be at the end of the year? If we're sitting right now and we're planning for 2023, okay? When I sit down at the end of 2023 and review my year, what would make me happy with my net profit? What's going to cover expenses? What's going to let me invest in my business? Take a little cash out to pay for a trip to Mexico? What is going to get me there? Okay, so let's look at this formula. So, and again, scan the QR code, you'll get this formula, and we're happy to walk you through it. But your operating percent as a percent of sales, your markdown percentage, so how much sales are going to come from markdowns, what am I expecting, and then your desired net profit, and you take that and you divide it by your markdown percentage. So let's look at this. So my operating expenses are 40% of my sales, okay? 0.40. Here we have my markdowns. I'm expecting to do about 20% of my sales in markdowns, and I want to end the year with a 6% net profit. Then your IMU should be, wait, did it say it there? You're looking at a 55% margin, okay? So, let's take a look at how that actually pans out. Sorry. Okay, let's look at the difference between a 52.5 margin and a 55% margin. So that's like a 2.11 markup and a 2.22 markup, right? It seems like nothing, right? That's percent 0.1, okay? But watch the impact it could have on your business. So if you've been going along and you've been saying, I'm just marking up by a half, right? I'm just doubling the cost. Watch the difference this is going to make. So, on a $9 item, it's going to come out to a retail price of $19, where my new IMU is going to sit at $19.99. Okay? Only 99 cents. Not going to change my life. Okay. Let's take that $1 million retail we talked about. Okay? That 52.5 versus the 55% margin, at the end of the year is going to change their bottom line by $30,000 in net profit dollars. Okay? So adding on that 0.1 of a percentage point to every single item for $1 million retailer just added $30,000 of net profit in this calculation. Okay? That is how important your IMU is in really paying attention to how you are pricing your merchandise. Okay? I want to give you one more example. So, often we price based on the cost, right? That whole idea of I'm just going to double the price, 2.5. But let me show you why that's a tricky time. Okay. If the wholesale cost of this dress, you go in there, you see a great dress, this is a dress. If the wholesale cost is $50, what would you price it for the customer? What would you make the retail price? 100? 100, great. 150, okay, we want to try some margin there. 125, right? We're determining the value of that dress based on this price. No one asked you one question about it. What's the fabric? Is it cotton? Is it silk? Right? What is the real value? What is my customer willing to pay? So I'm going to confuse you guys for a second. Okay? Let's take something that I don't know much about pricing. This big screen TV. Okay, it's 60 inches. It's big. Okay? It's a nice size TV. It's a new model. It's quantum LED. I have no idea what that means, but it is. It has Dolby Vision. Sounds good. Again, don't know what it means. 4K HD. I think that's what you need these days. It's a smart TV. It has all the apps, Netflix, everything. What's the price? Okay. What would you be willing to pay for that? $800, $900. Okay, what would you be willing to pay for that TV? Yeah. $600? $400, that's a good deal. $400 on a 60-inch TV. Okay? Anyone else? What would you pay for that TV? $900? Okay, right. So we are determining the value of this TV based on not what it costs, not the wholesale price, but what we think the value is to the customer. Okay, these TVs range from $400 to $1,300 online. They run the gamut. So really the retailer is saying, what do I think my customer is willing to pay for this item? So taking that shift in mentality, don't look at it as this dress is $50 at cost, therefore $100 at retail, that's just what it is. Will your customer pay $150 for it? Will they pay $127 for it? If they're going to pay $100 for it, maybe that value, if you sell it correctly, if you show them the features, we can get that value up. So we want to steer clear of just pricing based on cost. Okay? And number 10, and then I'll leave some time for questions and we will wrap up. Thank you for staying with me today. I know we went over a lot, but this is super important right now. You know, again, we're in a exciting time for retail, but it's only exciting if we kind of put our heads down and do some of the work that's going to prepare us to really capitalize on the success. Revisit your break-even. Okay? One of the first questions when I speak to retailers that I ask is, do you know your break-even? Do you know how much you have to do in sales this year just to break even? And the answer I always, 9 times out of 10 get is, oh my God, I'm so embarrassed, I've been so busy, I don't know, I can figure it out, I'll look into it, I'll call my accountant. This is something that as entrepreneurs, as small business owners, as independent retailers, your cash is so vital to your business. This number should be something that you're revisiting every 6 months, if not 3 months, okay, to really have an understanding of what do I need to do? What do I need to do in the coming months to really recoup my expenses and make some money for this business? So, how do we calculate this? So knowing your expenses, owning your expenses, tracking your expenses, and really taking ownership of it is going to be a game changer in your business. It's your fixed expenses versus your variable expenses. And again, free worksheet, it's the break-even analysis where we give you a really simple to use worksheet that's going to help you find that number. Okay? Do I have to do $450,000 or do I need to do $625,000, right? That's a big difference, but knowing that number is going to empower you. It's going to empower you. So, really, all of this is the underpinnings of open to buy plan. And open to buy planning may be really complicated in practice, but it's really simple in thought, right? How much inventory do I need to do the sales that I need to do to break even in my business? That's really it, okay? If I have to do $500,000 to break even, how much inventory do I need to do that $500,000 in sales, okay? Getting there is a little bit more winding road, but that is the underpinning of open to buy planning, and it is more important than ever because inventory is an investment. It is an investment that you are here making in your business, and you want to make sure you are maximizing that investment and getting a return, and that return is cash money. Okay? So, it's your first step to better control of your inventory. It's a plan. It's a budget. It's guidance for how much to buy and when to receive it. Buying is half the battle in there. When are you landing those goods? It creates future benchmarks for evaluating your progress, right? I know I'm running out of time, don't be mad, okay? One of the things I also realized, well, I'm just looking, this is what I did last year, okay? Well, I did this last year, so that's what I want to do this year. Last year was a really weird year, right? It was one of the biggest years in retail, 2021, right? So if you're just comparing to LY, you're setting yourself up for disappointment potentially. Instead, we want to plan what we want to do in sales based on the actual conditions. So maybe you're planning up in some categories, and maybe you're planning a little softer in some categories. But we're not just comparing to LY. We want a plan, a forward-looking plan. And again, remember, it's not just looking at sales, it's looking at something that your balance sheet doesn't look at, and that is time. Okay, remember, merchandise does not have birthdays. The time and the efficiency and how much time it takes you to sell something is just as important as how much you sell it for, right? How quickly you can turn that is just as important as the dollars you're getting from it. And we saw that earlier. Okay, so I know I threw a lot at you. Remember, success is when opportunity meets preparation. So let us help you prepare. Call me. I'm happy to speak to anyone and do an evaluation of your business. Just get a sense of what your inventory levels are and really help you through this. I know there's some confusing topics in here, but when you break it down, we're really just looking to put cash in